Welcome to Profitable Forex. Here we give you amazing strategies that will help you trade profitably. So today I brought to you a very wonderful strategy that you can use for your currency pairs, okay? And you can use it for gold, for trading gold. I know gold is a very volatile asset and many persons find it difficult to trade gold, but this strategy is gonna help you towards the kill gold. You're gonna milk your broker with this strategy trading gold. Okay, so right now I'm gonna tell you how the strategy works. Okay, so right now we have some indicators set up, of which I'm going to give you the setting of that indicator. Okay, so this strategy is a scalping strategy. You can use it to scalp in the 1 minute time frame. Of course, you can use it for swing trading in higher time frame. It works in all time frames, okay? But for the course of this video, we're going to be scalping. So you can, of course, you can use it for any of the time frame, even to the daily time frame, but for the sake of this video we're going to use it to scalp, and that's what we're doing. And you know, when you're scalping, you don't stay long at the market, you don't hold on a trade for so long. Okay, so I'm going to go ahead and tell you how the strategy works. Okay, so on our main chart we have the moving averages, two moving averages, and on the indicator window we have two indicators, the RSI and the envelope. Okay, hey, hold on, do not rush up to go look for the setting. Okay, do not skip this video to go look for the setting. Hold on and listen to the explanation, because when you miss the key points that you need to know, you are gonna lose even with your indicators set up. Okay, so let me explain to you how the strategy works. As you can see, we took a trade and is in profit, of which I'm going to close the trade very soon. Okay, because we're scalping, we don't have to hold on for long. Okay, so how does the strategy work? The strategy is pretty simple. The explanation is easy and the setup is straightforward. Okay, but before we dive into the explanation, if you're here to subscribe to this channel, I want you to hit the subscribe button. Okay, it means a lot to the growth of this channel, so hit the subscribe button and turn on the notification bell so you will be notified when we post many more amazing strategies. Look at that massive sell, guys. Look at that massive sell. Okay, look at that massive sell. Can you see this? Can you see this? Oh my God, can you see this massive sell? You are gonna kill your broker with this strategy. You're gonna kill your broker with this strategy. Okay, so when you get, or when you've gotten this profit is enough for you, you just, get out of the trade and wait for other opportunities to take more trade. Okay, of which I'm gonna go ahead and take my trader, even if it's gonna sell more. Gold is very volatile, so you don't have to wait, except you took your analysis from the higher time frame. But if you are trading on the 1 minute time frame, do not hold on for trade on that. Do not hold on to that trade for long. Okay, so how does the strategy work? Firstly, the first thing you have to look out for is at your indicator window. Okay, so you have to look out for it. Hold on now. I just want to go ahead and close. This trade is reversing. Is about to reverse now. You can see that. So I want to go ahead and close the trade and come back to explain how the strategy works, because it's currently forming a reversal candle. Okay, so we've closed the trade. Okay, because it's still gonna sell, but it's gonna retrace a little bit, okay, before it sells down again. So but why is retracing? You don't have to lose the profit, you've already secured, so you have to get out of the trade and wait for better opportunities that you can enter. Okay, so how does the strategy work? A quick one. Before taking a trade, you have to look at the lower envelope, the lower band of the envelope, which is the red one. Okay, which is the red one. So make sure that the red envelope is touching the 10th level. Okay, this is level 10 of the RSI, so make sure it's touching the level 10 of the RSI. Okay, make sure it's touching it, and not just touching it, it has to like go a little below it, and it has to go a little below it. Okay, like you can see here, You can see that here. When you watch closely, it has to go a little below it. Okay, so when you observe that, you know that the trend is gonna change, okay, from the previous direction to a new direction. Okay, so you don't just enter trade after seeing it at level 10. You have to wait for it to form that V shape. Okay, when it forms the V shape, then you have to look out for the next condition after it has formed the V shape. Okay, and also the blue envelope should be close to level 61. It should be close to level 61 or a little below level 61. Okay, like you have over here. The blue envelope should be close to level 61 or a little below level 61. That is if you want to go in for a buy, that if the trend is changing to a bullish trend. Okay, so when going in for a bullish trend, the blue is not really very important, the position of the blue. What is more important is the position of the red envelope. That is this one over here. That is the one that is very important when you are going in for a buy. But when you want to go in for a sell, that is if the trend is changed to a bearish trend, what you have to look out for is looking at the blue envelope at the 90 level. Okay, like you have over here, the blue envelope at the 90 level, and not just at the 90 level, it has to go a little above it and then retrace a bit to form that V shape. Okay, before you can go in for a trade. But that's not just the condition that needs to be met, so we have other conditions to look out for on our main chart. Okay, so on the main chart we have the moving averages. So after the confirmation, let me go back to a bullish trend. So after the confirmation of the red envelope at the level 10, also check on your main chart to see that your moving average crossed below the chart like it did over here, the blue moving average. When the blue moving average crossed below the chart, then you can enter a trade. Okay, as the price progresses, the green moving average is going to cross below the chart also, like you see over here. Okay, and then both of them will intercept each other. When you see this interception, just know that that trend is going to go further. Okay, that trend is going to go further, it's going to go upward when you see that interception between the two moving averages. Okay, so you can hold on for that trade for a little while, but meanwhile you have to check out for possible resistance zones that are close by. All right, so that is the condition that needs to be met. Okay, so let me go over it again. Before taking a trade for a buy, that is when the trend changes to a bullish trend, for you to know that the direction of the price is changing from bearish to bullish, the red envelope will be at the level 10. Okay, and not just at the level 10, it has to go a little below it. Okay, and wait for it to retrace to start going up again to form a V shape. Okay, before you can enter a trade. And also the blue envelope should be close to level 61, of which is not really important, but make sure you're watching out for it. And for you to confirm that, you have to move your chart across the page to make sure that these positions are fixed, they are not moving, they don't leave that level at which you have analyzed them. Then next thing is to check on your main chart and make sure that your blue moving average is crossing below the chart. Okay, so that is the condition that need to be met before taking a trade for a buy. That's when you know that it's time to buy, then you can go in for a buy. Then for a sell is the reverse. The explanation is the reverse. So the blue moving average has to be at level 90. Okay, and not just at level 90, it has to go a little above it and then retrace a little bit to form the V shape. Okay, and the red moving average will be at level 40 or a little above level 40 like you have over here. And also you have to look at your main chart to see that the moving average, the blue moving average crossed above the chart, and also the green moving average crossed above the chart, and then you can go in for a sell. Okay, you know that is the right time to sell. So to confirm those, make sure you move your chart across the page to see that your analyzed position is not altered. It doesn't move. Okay, it doesn't shift. If it shifts, if it moves, do not enter that trade. You can see what I told you. You can see the reason I exited the trade, that it has retraced. Can you see that it has retraced? Okay, so when you are scalping, you don't hold on to a trade for long, because this is 1 minute time frame. Unless you are using the upper time frame for your analysis, then you can hold on to that trade. And you can see what I just explained to you. When it got to this level, it started retracing. So this is just how the strategy works, and the strategy works for all currency pairs, guys. That's the beautiful thing about the strategy. It's not just only gold. You can use it for all currency pairs. Let's go check out other currency pairs. Okay, let's check out USD card. Okay, so here we are on the chart. You can see that. You can see the condition being met here. You can see that, and it was a bearish trend. Okay, let's check out other currency pairs. Okay, let's check out, you can even use it for crypto trading. Look at that. Let's check out BTC USD. Can you see this? Okay, look at another short signal over here. Can you see that? The condition was met. This is BTC USD, guys, and you can see that is a bullish trend. So it works for all currency pairs. I mean, all currency pairs. All currency pairs. So for those of you finding it difficult to trade a currency pair, this strategy is a blast, guys. They have to use a strategy to milk your broker. Okay, you have to milk your broker. You don't have to be blowing your account. So let's go back to gold, of which that's the case study asset we are using. Okay, it works for the 1 minute time frame, the 5 minutes, the 15 minutes, even to the daily time frame. Let me show you. Let's go to the 5 minutes time frame. You can see that you can take your analysis. Look at that V shape. Look at that V shape here. You can see that V shape and the conditions being made there, and it was a bearish trend. Okay, this is a 5 minutes time frame. If you want to take analysis from the 5 minutes time frame, you can do that. If you want to take it in the higher time frame, let's go to the 1 hour time frame. You can see the conditions are being met in all time frame, guys. So if you have a big account, you can do analysis from the upper time frame. Okay, but remember that gold is very volatile. Okay, so remember that gold is very volatile, and make sure your analysis is right before jumping into a trade. This is a condition being met here, and the moving average crossing below the chart, and it went bullish. It went bullish. It's happening every now and then. Look at it. The condition for a sell, can you see this? The condition for a sell being met here. Can you see that? And it went bearish. Okay, so this is how the strategy works. If you are getting value from this video, I want you to subscribe to this channel. Hit the subscribe button, and so you'll be notified when we post many more amazing strategies that will help you to trade. So let's go to our indicator window. So click your F symbol over there. All right, so the first indicator on our main chart is the moving average. Okay, so moving average period 9, shift 0, method simple, apply to close, style 3 pixel, and the color is blue. Of course, you can use any color of your choice, and you click on done. And the second moving average is period 20, shift 0, method simple, apply to close, style 3 pixel, and the color is green. Of course, you can use any color of your choice, and you click on done. Then we have our fractals, which is not very important, but you can use the default setting for the fractals. So we have the first indicator on the indicator window, which is the RSI, the relative strength index. So the relative strength index period 14 apply to close tie 1 pixel, and the color should be your background color. Then we have our levels, very important. So the level, we have level 90, 61, 41, and 10, and the star is 2 pixel and the color is black. Okay, so that is the indicator, the setup for the RSI. Then we have the last indicator, which is the envelope. So the envelope, we have period 2, shift 0, deviation 0.100, method simple, apply to close. Styles, the upper band is 2 pixel blue and the lower band is 2 pixel red. There are no levels, so leave the level empty and click on done. So these are the indicators for trading your gold and other currency pairs, guys. So I want you to go ahead and start winning with the strategy, and drop your review about the strategy in the comment section. So if you're a beginner, make sure you practice on your demo account to master the criteria and the conditions that need to be met. Then you can go ahead and trade with your live account. Okay, if you are a beginner and you're yet to have an account, there is a link in the description of this video. Click on that link and create a trading account for synthetic indices. Okay, for other strategies on the channel. And if you are a struggling trader and a beginner with no idea and you need mentorship program, we have an academy that we can teach you from scratch to pro. So there's a WhatsApp link in the description of this video. Click it and join the WhatsApp group and contact me for your mentorship program. All right, so go ahead and win with the strategy and trade profitably. Bye.